Hello, bankers. Welcome to Learning Sessions. I'm Himanshi Malik, and today we are going to discuss Chapter 26C in AFM. So, this chapter is going to be about equipment leasing or lease financing. Basically, we are going to discuss the decision made by a financial manager that are on the context on whether to buy or just, lease and equipment. So that are the decisions we are going to discuss now. But before we go into this chapter in detailed discussion, let me just give you a brief about the course. That is our subject that we are doing, AFM, and your course JAIB, for which you can prepare for all the subjects in much detail with our JAIB early bird pack. Now this pack is valid till exam, and in this we are going to help you from beginning till end in your full-fledged preparation. We are going to help you understand the concept, help you prepare for your exam, help you in revision from beginning till end. You will get full support. So do enroll in this course if you want to pass your exam with good marks. And to enroll in the course, you can download our app, that is Learning Session IIBF Exam app. This app is available on Android and iOS both. So you can download this app and enroll in the course. Or if you don't have the app, you can click on the link that is given to you on the comment and you can access the course. So, do enroll in the course so we can help you with your exam. Now, let's just continue with our today's topic, that is 26C, leasing decision. Now, this is very important topic. I would say all the chapter in AFM are very important because these are the practical chapters. You're going to see yourself applying these in your professional life, or maybe you will see others apply these and you will evaluate their financial position based on these decisions. So it is very important so you understand these concepts, only then you will be able to work on these in your real life. That being said, let's just get started with our chapter. So this first type of contract is what? Let's say I've taken a car on a lease and the lease period is of 5 years. Okay, I can use this car for 5 years and I have to pay monthly rental of 10,000. This is my monthly lease. And the lease period is of 5 years. Now, at the end of 5 years, I have two options. What are the two options? First is I can return the car to the lessor, right? And I'll be done with the contract. And the other option is I can choose to keep the asset. I can pay an additional amount of, let's say, 1 lakh, and I will get the ownership of the car after 5 years. Now, when we have this option in our lease contract, where we can get the ownership of the asset at the end of the contract, that is called finance lease. Why do we call it a finance lease? So basically, ultimately what is happening in this contract, we have taken the car on a installment basis, right? We were paying for the price of the car for whole 5 years, and at the end we took the ownership when whole payments were made. And that is what happens when we finance an asset also, right? When we buy a car, rather than taking it on lease, we take loan from bank, and when we take that loan, we the loan period is of 5 years. When do we get our ownership? After 5 years, when we have paid off the loan. So rather than taking the loan, what we are doing, we are taking the car on lease, and at the end we are getting the ownership. This is called finance lease. So the lessor and lessee agree that ownership of lease will be transferred on lease to the lessee on completion of lease period. It is a method of providing finance. So indirectly, we are just providing finance to buy the asset. Where lessor buys the asset not for its own use but for use by the lessee for an agreed period. It results in transferring risk and reward for ownership of the asset to the lessee. Now, Ind AS 116 defines that when we are going to classify an asset as a finance lease, at the point when we transfer all the risk and reward, substantially means almost all risk and reward incidental to ownership of the underlying asset, when we are going to transfer those to the lessee, that is when we will classify that lease agreement as a finance lease. So at the beginning of the lease, we have to see whether I have the option to purchase this at the end of the lease contract or not. If I do, then this is a finance lease. If I don't, then this is a operating lease. So that is what we are going to see in the next topic, that when is a lease normally classified as a finance lease? How will we come to know that this is a finance lease? So the first one is, I just told you that ownership of asset is transferred. The other thing that we see is that they have option to purchase the asset. Sometimes you will get the ownership, it is necessarily in the contract, and in other cases you will have an option to purchase at a price which is substantially lower than the fair value, and reasonably certain that option will be exercised. The price will be so low that you will be 100% certain that the person is going to exercise that option. So that is when we will classify it as finance lease. The third is, lease term is for major part of economic life of the asset. If the life of a machinery is 5 years and we have leased it for 4.5 years, so what does it mean? It basically means that we are selling the asset only, right? So that is also classified as a finance lease. Option number 4 is the present value of minimum lease period payment at inception of lease amount to substantial fair value of leased asset or more. What does this mean? So if I've taken an asset on lease for 5 years, and the lease payments that I'm going to pay over the 5 period term, right? So let's say I have to make 10,000 each month for 5 years. And if I take present value of all this future payment, the net present value that I get today, it will either be equal to or more than the fair value of asset that is today. Let's say today the asset can be purchased in market for 3 lakhs, and I am taking it on lease for 10,000 for 5 years, 10,000 per month for 5 years. And when I do the present value of these payments, I get the amount of 4 lakh. So this 4 lakh is higher than the current fair market value of the asset. It means that this is a finance lease. Then option 5, we have the leased asset is of a specialized nature. If the asset is of a specialized nature, that can only be used by lessee. it only means that we are selling it to the lessee, and we are providing a financing agreement in the form of lease. So basically we have substance over form here. Form is legal form, the legal agreement that you're saying. Legally, we are seeing that the person is taking asset on lease. That is the legal form. But in substance, what is happening? The person is getting ownership of the asset and getting a financing from lessee, and that is substance, and this is your finance lease. Okay. Option 6, the lessee has right to cancel the lease, and lessor's losses due to cancellation are borne by the lessee. That if the lessee cancels the lease, or any loss that occurs to lessee will be borne by, any loss that incurs to lessor will be borne by lessee. It means the risk and reward are with lessee only, the person who is taking asset on lease. The lessee has right to continue lease for a secondary period at a rent which is substantially lower than market rent. Once your lease period is over, you can renew the lease and the rent will be lower than the market value. So if any of these condition, if let's say out of these seven, your agreement agrees to five or six of these, it means you're taking a finance lease. The other lease option we have is operating lease. So what is operating lease? The one that is not a finance lease, the one where you do not purchase the asset. Okay. So a lease is classified as operating lease where you do not transfer the risk and reward incidental to ownership, or a lease other than the finance lease. So it depends on substance of transaction rather than form of the contract. Because on the form, if we see the legal form of the contract, both lease are what simply lease contract. We're taking the asset on a lease basis. But if we look deeply into the terms and condition, then we come to understand that whether the ownership is getting transferred or not. And if the ownership is getting transferred, it is a finance lease. If it is not, then it is your operating lease. Simple concept. So in operating lease, we have another concept called wet lease. So what is a wet lease? So see, if the lessor provides the know-how and related services for operating the asset and takes care of its insurance and maintenance, then it is a wet lease. In operating lease, so first of all, we have taken an asset on lease. We don't have the option to purchase the asset at the end, and we are not getting the risk and reward related to asset. So it means this is my operating asset. First classification is done. Now, once I have identified that this is operating lease, then I will see that the lessor is providing me with services. What services he's providing other than lease? He's providing me maintenance service for the asset. He's providing insurance for the asset. So it means this is a wet lease. And if the lessee has to pay for these expenses, if the lessee has to pay for the insurance, for the maintenance, then that is a dry lease. So what is the criteria for classifying an operating lease? First, your lease term will be lower than the economic life of asset. If the life of asset is 5 years, the lease will be either 2 years or 3 years. That is it. Or lessee has the right to cancel the lease without paying any substantial penalties. You can walk out of the contract easily. So if these conditions are met, then this is a operating lease. There are some other criterias also on basis of which you can classify the lease. So the first one is commercial leases. What are commercial leases? We just studied there are two type of lease. First is residential, other is commercial. So residential lease are for the domestic use, regular use. We take a house on lease, that is your residential lease. Or you just take a car on lease for your personal use. Things that we do for personal use, not for business, are residential. And if you take anything on lease for business purpose, that is commercial lease. So in commercial lease, we have further classification also. What are those classification? Let's see. First one is leveraged lease. So in this lease, the lessor borrows money to purchase an asset and then lease the asset to lessee. The lessor may borrow all or majority of the money to buy the asset. So let's see how will this case happen. There is a person A. A has taken a car on loan. A purchased a car on loan from a bank, and the loan terms are, let's say he has to pay 10,000 per month. Out of this, 1,000 goes to interest and the other part goes to principal. Now, what will A do? A will take this car and he will lease his car further to B, and he leased it for, let's say, 13,000 per month. Now, out of this 13,000, he will return 10,000 to bank to repay the loan that is taken on the asset, and 3,000 will be his profit. Now this type of agreement or this type of arrangement that happens, this is called your leveraged lease, because the asset is leveraged. What I just explained you the meaning of leverage in the first chapter itself, that leverage means when we are using debt agreement, right? When we are using debt financing, that means we are leveraging our asset. So in this case, when the lease agreement is taken on a debt asset, that is your leveraged lease. So this is how it works. You can read it. So ownership remains with the lessor only. It involves three party: lessor, lessee, and the lender, the one who gave us loan to purchase the asset. And this is how the payments will work. One portion will go to repay the debt and the other will be kept by lessor as his profit. Now, second is domestic lease. So, domestic lease is simply the one where all the parties are in India. So, all parties involved in lease transaction are in India. That is your domestic lease. On the other hand, we have international lease. Now, what will be international lease? The one where one of the parties of the contract is outside India, who is not domiciled in India. It is called international lease. Very simple. Cancelable is the one we can cancel without paying higher penalty. And the one that is cancelable easily is called your operating lease, because we have read the criteria that finance lease cannot be cancelled easily, right? And non-cancelable lease, the one do not have the option to cancel, or if you cancel the lease, you have to pay high penalties. That is your non-cancelable lease. It cancels only on occurrence of remote contingency or with permission of lessor. Okay, that is your non-cancelable lease. Then we have wet lease. What was wet lease? The one where lessor is providing us services related to maintenance of the asset, providing know-how related to maintaining the asset, or providing insurance. That is wet lease. And one where all these things are done by lessee himself, that is your dry lease. In this, lessee operates the equipment and is responsible for insurance and maintenance. Then we have one other type of contract, that is sale and leaseback transaction. Now, this is a very interesting kind of transaction, because this is on again, this is where you use the concept of substance over form. That on the legal form, you will see it as a simple lease contract, but if you look deep into it, it is a hidden financing agreement. Okay, so how does only this aspect is important that you need to understand. Other one will just you just review them once and leave it. Okay, so let's just see what is a sale and leaseback transaction. So let's say this time we are going to take example of a building. So let's say this is a building, okay, and this building is owned by A, and this is B, okay. So B was the owner of this asset. Now, what will B A do? A is the owner initially. A sold this asset to B. He sold this for, let's say, 1 crore. Sold the building to B. Now B is the owner of the asset. After selling this asset to B, what will A do? A will take this asset back on lease from A. Okay, so he is going to enter into a lease agreement and take this same asset on lease at a monthly payment of 15,000 for 12 years. And the remaining life of asset is also 10 years only. And the lease period is of 12 years. It means equal to or more than the life of asset. He has taken it for lease. So what does it mean? It basically means that A has this asset that he is using to get financing. What is A getting in return? He is getting 1 crore from sale of the asset first, and then he is also getting to use the asset on lease basis by paying 15,000 per month. So the possession of asset remained with A only. Initially he was owner, now he is lessee of this asset. And B, he is owner on the books only. He is, for legal basis, he is the owner of asset, but the person who is using the asset is A. And at the end of the lease contract also, A is going to buy back this asset from B. So ultimately this is a financing agreement that is hidden in form of lease. So they showed a sale contract rather than taking the financing itself. So that is your sale and leaseback transaction, that the asset owned by one party is sold to other party and simultaneously taken back on lease. A sold the asset to B and then at the same time he took it back on lease. Possession does not change. Before sale, A was in possession of the building. After sale also, A is in possession of the building. So possession did not change, but ownership transferred. Earlier, A was the owner, now B is the owner. So this is a method used to unlock value of asset of a firm. Where we don't want to take financing from bank, we can enter in a sale and leaseback transaction. So that is your another type of lease. So next topic that we're going to see is reasons for choosing lease. Why should we choose lease financing over purchasing the asset? First of all, if we are taking lease option like I just showed you here, if A wanted 1 crore loan, he had to pay interest to bank. Now, by selling this asset to bank, he does not have to pay interest directly. He just has to pay this lease payments and he can repay the amount and get back his asset. So he has taken financing, but in bank his credit score is not getting affected. In his books, liability is not getting created. So this is a better option if we see in term of credit score. Okay, so that is why people choose leasing over taking actual loan. So borrowing capacity is not reduced. Obligation created under lease arrangement is not reflected as debt in balance sheet. We just show it in the current liability that this is our lease payable, right? So firm's debt to equity ratio does not get affected. So that is the first reason we choose leasing over other financing. Then second is availability of full finance. If we ever take finance for purchasing an asset, let's say if A wanted to purchase this building, then he would have to pay 25% his own or maybe 30% of his own money, and rest would have been financed by the bank. But in leasing option, the entire amount is financed by the lessor. Lessee just has to pay the lease payment and he can get the ownership at the end. So he does not have to pay anything in advance and he can get full financing in lease option. That is another advantage. Third is convenience. Whenever we are taking an asset on lease, we don't have to take the obligation that comes with purchasing the asset. What are the obligation that comes with purchasing the asset? We have to pay for the insurance. Now, let's say I take a wet lease. So what happens in the wet lease? I am not responsible for insurance of the asset. I'm not responsible for maintenance. Everything is will be covered by lessor. I'll just simply use the asset and return it when I'm done. So it is more convenient for me. I am not under obligation and I'm not responsible for any damage to the asset also. So this is more convenient option. And let's say I have taken this asset on lease for 3 years. Okay. But after a year only, the technology completely changed and this asset is of no more use to me, I can simply cancel my lease contract and enter into a new one. But if I had owned this asset, then it would have been a complete loss for me. I would have to invest entire money again in purchasing a new asset, and it would have been a costly option. So this is more convenient for businesses. Another thing, I just explained it to you, that we avoid the risk of obsolescence. We can simply cancel the lease contract and enter a new one if the technology gets obsolete. Then we have tax advantage also in lease. If we purchase an asset, we only get depreciation, right? But if we take the asset on lease, the lease payment that we are paying, that we can claim as an expense in the tax, and we can reduce our profit. So that is another benefit of taking asset on lease. Then we have option 6, the another advantage of taking asset on lease: financial flexibility and cash flow. So if we purchase an asset, let's say the asset cost 10 lakh, this entire amount will be blocked for a fixed period, and even after the end of life of asset, we will only get scrap value in return. So the entire amount gets fixed. Our uh, working capital gets affected, our long term capital gets affected with this. But if I'm taking asset on lease, I only have to pay, let's say, 1 lakh rent per year. So the remaining 9 lakh is still available for me to use. I can invest it, and I can earn interest on it, or I can use it in operations and I can make more profit. So anyways, I have more flexibility in finance and cash flow. I can use it however I like. And another benefit is that when we take an asset on lease, rather than taking a loan to buy the asset, our covenants are less restrictive. Because if I'm taking an asset on lease, lessor will only put condition related to asset, that you have to use asset like this, you have to maintain it like this. These are the condition is going to put. But if I'm purchasing this asset and taking loan from bank to purchase the asset, then bank will say, okay, you're taking loan from me, then you have to maintain this debt equity ratio, your working capital should be this, your current asset. They have more control on your financial statement, and more strict covenants are there. And you know it, in loan contract, if let's say the bank wants 2:1 of current ratio, and at any point your current ratio reduces, you have to pay penalties to the bank also. So all these things can be avoided if we simply purchase the asset, if we simply take the asset on lease. Next topic that we have is content of a lease agreement. So what do we usually write in the lease agreement? What will be the action? We first of all we decide on term of the lease, that this is going to be for 5 years, 10 years, whatever, and if we can renew the lease or not. Then structure of the lease, that you can purchase the asset at the end, you will pay for insurance, you're responsible for its maintenance, you have to return this asset in particular condition us to us back. All the future action of lessor and lessee, right? We just covered that. Then content of a lease agreement are different for different asset and different type of lease. So let's say it is, if it's an operating lease, then we will say you have to return this asset in particular condition. But if this is a finance lease, then what it will cover, what it will cover, that you can purchase the asset at the end of the lease at this period, at this amount, or you can renew the lease at this rent after the end of lease term. So different type of lease will have different agreement, and different asset will have different agreement. Now let's just see some of the details that are covered in lease agreement. First one is particular of the parties, that this is our lessor, this is our lessee, this is the asset, all the information about the parties. Description of assets, right? How much, the scope of asset that you can use, what is the warranty on asset, everything. How will be the equipment delivered to you, and who will be responsible for installation cost. Those things are also covered in the rent agreement itself. Then what is the primary period of the lease, when is lease getting started, how can you renew the lease, or whether you can renew the lease or not. Those things. And important aspect in a lease contract is security deposit that a lessor takes from you initially. So what will be the security deposit? What will be the payment terms? You have to pay monthly, you have to pay quarterly, how the payments are done, right? All those things. Transferability of ownership, if that option is available, then it will be mentioned. Who will be responsible for repairs? Who will be responsible for the insurance, taxes? Can you sublease the asset or not? And what are the restricted activities that you cannot perform with this asset? Let's say you're taking a building on lease, they will add a clause that you cannot sublease this building to other person, or they will say okay, you can sublease, it is up to your wish. So these things will also be mentioned in the lease contract. Then, if you want to terminate the lease, what will be the condition of terminating the lease? How before in time you have to intimate the lessor that you want to cancel the lease. How much penalty you will have to pay if you want to cancel the lease? All these things will be mentioned. And if any of the party default, how will they resolve that? If they get into a dispute, how will the dispute be solved? Which arbitration court will be used? All these things we cover in the lease agreement. Okay, so that was the agreement aspect. Now let's see legal aspect of leasing related to GST, income tax, all these things. So first of all, which act cover leases? So Transfer of Property Act covers the lease agreement part. Okay, so this is the act that deals with leasing arrangements. And Indian Registration Act, because you have to get your lease agreement registered. So definition of lease is provided in Transfer of Property Act, and Indian Registration Act cover only property and not equipment. Provision related to bailment in the Indian Contract Act may be construed applicable to equipment leasing contract. So the acts that are applicable are first Transfer of Property Act that gives you definition of lease, then Indian Registration Act that will deal with your property leases, and if you have to deal with equipment leases, then General Contract Act that we have in India, Indian Contract Act, that will be there. So these are the acts that are prevalent when you enter into a lease arrangement. So this is as per Indian Contract Act that the agreement between lessor and lessee is similar to the bailor and bailee. So bailor and bailee are the terms used in Indian Contract Act, where if you give a property to other person to use, that is a bailment contract. So leasing is similar to bailment contract. Now next aspect is of GST. How will the GST, what will be the GST implications on a lease transaction? So Section 7 of CGST Act defines what? That supply. We know that in GST, the triggering event for taxation, triggering event is the event, like if that event happens, only then tax will be applied. So in GST, whenever there is a supply of goods or services, then GST is applicable. And in definition of supply, leasing is covered. So it means lease is within the scope of supply and is taxable. So first thing is clear, GST is applicable on a lease contract also. You have to pay GST on leases. First is clear, lease is supply. Second, you don't have to read the whole definition and learn it, because this is more in context of GST. The only thing that you need to remember is yes, GST, lease is covered under supply, and if anything is a supply, you have to pay GST on it. Now, next important thing is GST rates on lease transaction. So we have two classifications here. First one is for industrial plots that are provided by state government, industrial development corporation, or undertaking to industrial unit, and leasing of agro machinery or vacant land. So industrial plots or machinery or land for agriculture. If these two things are given on lease by state government, then the rate of GST will be nil. So basically GST will not be charged. Okay. But if it is any other lease transaction other than industrial plot by state government, it means non-government agencies are giving anything on lease, that will be covered under supply of goods or supply of services, and the rate will be applicable that is given in the act. So this is all you need to remember, that if state government is giving industrial plot, so two things you need to remember: industrial plots or agro machinery or vacant land by state government, the GST rate will be nil. Easy to remember. Now let's see the income tax implication of lease. We just covered in the advantages of lease that you can claim lease payment as an expense in your income tax, right? So income tax rules do not differentiate between finance lease and operating lease, because when we started the chapter, uh, what we covered, that according to accounting we divide the leases in two part, because in accounting we see substance over form, right? But income tax act is a law, so law is always going to see the legal form. That's why they do not differentiate between finance or operating lease. So in a lease transaction, lessor is the person who is owner of the asset, right? He is giving asset on lease. So in income tax, always the owner of the asset has a right to claim depreciation. So if the lessor has given asset on lease, he can claim the depreciation expense. First one is clear. But in sale and leaseback transaction, owner has given the asset back on lease to the original owner, right? That we did in sale and lease back. So income tax in this case allow depreciation at income tax rule permit depreciation on the sold assets depreciation value rather than actual value of the sale transaction. Because um this example that we covered, right? Sale and lease back. Now the building was sold for 1 crore. But we know that this sale was just on the face. In actual, in substance, this is a financing agreement only. And this is why income tax gives you uh, exception in this case, that you will not take depreciation on this 1 crore sale asset. B is the owner in this case, so B cannot charge depreciation on 1 crore, but he will have to charge depreciation at the original cost that A purchased this asset on. Okay, this is very important exception. So let's say A purchased the asset 10 years back at 65 lakhs. So B can claim depreciation only on 65 lakh, not on the sale and leaseback sale value. So this is what they've given us, that income tax permit depreciation on the sold assets depreciated value rather than actual value of sales transaction. We don't see the actual value of sale transaction here. Entire lease rental are taxed as income of the lessor. The lease payment that the lessor is getting, that will be his rental income, and lessee is entitled to treat rentals as expense. Clear? Now let's just see accounting aspect of lease transaction. So we have to see accounting from two aspect, because two parties were there in the lease transaction. First one was your lessor, another one was lessee. So lessor is the person who is giving the asset on lease. He is getting rent income from it. So how will he account for it? It will depend on the nature of asset. If it is a finance lease, accounting will be different. If it is operating lease, accounting will be different. So first we have to see the finance lease. So the accounting aspect we will cover in the next lecture, because otherwise this lecture will get too lengthy. So I guess for this we should just take a pause for now. Let's revise what we have done today. So what have we covered today? Firstly, we understood the meaning of lease. Then we studied the type of lease contract. The first one was finance lease and the other one was operating lease, right? Finance lease is one where you get the ownership of the asset at the end, and we have done 7 conditions that define an asset as a and lease agreement as a finance lease, where the substantial economic life is leased, and then you get the ownership at the end of the year. You cannot you cannot cancel the lease easily. You have to be responsible for any loss if anything happened to the asset, right? So all these things, if are covered in the agreement, that is a finance lease. But if it is not, if the ownership is not getting transferred or the lease is for a short period, that is simply your operating lease. That is the first thing we covered. then we then we saw other type of lease like domestic lease, international lease, cancelable lease, non-cancelable lease, wet lease, dry lease, right? Wet lease, dry lease is in case of operating lease. If the lessor is covering for operating cost, sorry, insurance and maintenance, that is wet lease. If the lessee is covering it, that is a dry lease. Then we studied the benefits of lease contract. So main benefits were what? That your financing agreement was not getting used, your full amount is getting financed, you don't have to pay interest to the bank, there are less restrictive covenants, the asset you are in a more convenient contract, you can cancel anytime. If the technology gets obsolete, you can replace the asset easily. All these benefits were there. Then we covered the part of lease agreements, what all things are included in lease agreement. And then we saw the legal aspect, that GST implication and income tax implication. So that is it for today. In next lecture, we will cover the accounting aspect of the lease. Okay. So thank you so much for your time. Let me know if you like this lecture, like the video if you were able to understand the concept. And if you have any doubt, you can ask in the comments. And don't forget to enroll in the course and quickly start your preparation for JAIIB. Download the app learning session on Android and iOS. It is available. You can download it and enroll in the course. Thank you so much for your time. Bye bye.